It was around 12 months ago that Pump.fun became the world's biggest crypto app by flipping the entire Ethereum ecosystem in daily revenues. What followed was an impressive period of growth in users, developers, institutional interest, and capital inflows for Solana. But today, the Solana trenches are divided about Pump.fun's billion-dollar raise. So we have two major questions to answer. Is Pump.fun really extracting billions from the Solana trenches? And does this change the way institutions think of Solana? So here's the crux of it. Pump.fun's billion-dollar token sale at a $4 billion valuation would make it the third biggest ICO in crypto history. One camp thinks Pump.fun's plans to raise $1 billion is extractive because the Launchpad's already earned $700 million, and well, enough is enough. Others, like Toli, have long argued that revenue's king, and that rather than viewing revenue as extractive, we should focus on 10xing DApp revenue and growing the whole pie. On the second question of how institutions think of Solana in light of the Launchpad news, we're about to hear from three of Solana's top treasury vehicles and a leading VC. But first, here's Jupiter's Cash Danda on the New York Stock Exchange, zooming out and offering us some much-needed context. The backdrop, if you will, against which the ongoing debates are raging.
I think there's two really cool things happening on Solana right now. So the first is all these experiments in capital formation, as we might call it, right? So we're seeing a lot of this internet native capital formation, or internet capital markets, as we call it, where people are able to fundraise for ideas, for movements, for companies, all natively on chain. And I think that is really exciting. The second piece that's really exciting is seeing the tokenization of many real-world assets coming onto Solana as well. You just saw Superstate with a major announcement that publicly listed companies could issue shares on-chain. There's multiple stock exchanges that are working with Solana around the world to tokenize their equity. I think you've had Ondo and a few of these other projects on as well. So we're going to see a lot of these major assets come on-chain in really interesting ways. But I'd be remiss if I didn't also mention all the long-tail assets that are coming on Solana. And I think that's the thing that's oftentimes overlooked by a lot of traditional kind of finance people. The markets for things like rare whiskeys or concert tickets or wine or sneakers, all of those are also coming onto Solana right now because that's where the trading volume and where the users actually are.
And this idea that capital formation on Solana will continue in the form of both short and long-tail assets seems to be supported by new launchpads emerging. We see Let's Bonk, Boop, and Believe, which are challenging Pump.fun's monopoly. So if launchpads are growing and VCs are pouring capital into the Solana ecosystem, why are the trenches divided? I think this poll captures the sentiment fairly well. In the immediate future, the Pump.fun token sale could well be a liquidity drainer, as we saw around the Trump and Melania meme coin launches. And this is exactly where the meme coin launchpad story and the institutional adoption narrative really start to align. Because although the peak meme coin launches drained liquidity and had an adverse impact on meme coin mania, here's Brandon Potts bringing some nuances to why Pump.fun might actually be overall net positive for the ecosystem, at least from a technical perspective.
I mean, look at Pump.fun, right? They kind of took this thesis of we can tokenize everything, or anyone can have a token. It can be a meme, it can be super fun, it can be super kind of social and consumer oriented. And look what it did. It stress tested the hell out of Solana itself and some of the systems like Jito, for example. And look, like as a result of that, it generated a ton of demand for block space and was throttling a lot of these systems in kind of their V1 or V2 iteration, if you will. And as a result of that, people came in and were able to optimize, all right, here's a hotspot of state, or here's a system that frankly couldn't stand up to that demand.
So Brandon clearly makes a valid point, and it's a conclusion that our next guest also shared when we spoke about Solana's future from a technical perspective. And it really negates this idea that something is necessarily negative or that it ruins Solana's reputation simply because it's bad for meme coin liquidity. Clearly, meme coin trading volumes are not the only reason why TradFi has an interest in Solana. So to help us understand if we are indeed looking at a billion-dollar extraction or just the natural growth trajectory of permissionless systems, here's what Max Kaplan from Sol Strategies thinks of this idea that meme coins are all bad optics and that Launchpad growth will somehow limit institutional adoption.
If you want to launch, an institutional grade product on a blockchain, Solana is the only one out there that has proven the overall ecosystem that it could withstand like a significant amount of volume, double the two biggest US crypto centralized exchanges combined. And, I think that investors will be smart enough to look past some of those things and, some of these extractive launches and look at the overall technology. And I think we've seen that with, some other institutions coming onto Solana.
So why then does Pump.fun's success bother us so much? Why does it all matter? Well, the answer might lie in the details of the Pump.fun raise. You see, they've announced that 25% of supply is allocated for a public sale at a 4 billion FDV, with only 10% earmarked for airdrops. So this user argues that Pump.fun earned $700 million fair and square by building the most addictive online casino ever. But that the trenches are largely disappointed over the measly 10% earmarked for airdrops. It seems we expected more. But on those expectations, it's worth zooming out and reminding ourselves that Pump.fun was never built to be a beacon of charity or philanthropy. It was always considered a degenerate offspring of crypto in Las Vegas, sort of like a slot machine, but for memes. That said, we still don't know why Pump.fun decided to raise as much as $1 billion, and this user reminds us rather cynically that Pump.fun has had a negative impact on the industry as a whole by turning investors, if you can call them that, into gamblers. And Grant, perhaps even more cynically, points to who among us will likely come out in blind support of these raise details. As Ariel Givner reminds us, only 5 wallets out of 320,000 made over 50k last month, meaning you're more likely to get hit by lightning twice. So it is fair to see that there are two camps emerging in this ongoing debate. But let's unpack this for a second. If Pump.fun is the most successful consumer app in recent times, why do they need $1 billion? What are they going to use it for? Because until we can answer this question, we can't really form an opinion with any degree of certainty. Are they going to build a perps exchange on Solana that can truly rival Hyperliquid? That would be great for the ecosystem. Or are they going to build their own layer 1 as others have speculated? Because that could drain significant liquidity away from the ecosystem. Even if the answer to both of these questions is yes, then $1 billion is still a lot of funding, considering that would make them the 3rd largest raise in crypto history. So it seems that because the meme coin Launchpad revenues are declining, Pump.fun is somewhat forced to pivot into other, more sustainable avenues of onboarding users and generating revenue. One solid take from Paladin and Mountain DAO founder Edgar is that Pump.fun can still 100x from here by taking on global video giants like Twitch and YouTube, which are valued at $50 billion and $500 billion respectively. So considering everything we've just heard, how does this impact institutional adoption? The short answer, at least according to Brian Rudick of Upexi, is that it doesn't.
Our thesis of Sol is not changing. We're Sol only. We are a buy and hodl only strategy. We are not considering buying any other tokens.
The long answer is a bit more compelling because if we think back over the last year, we see that move fast and break things, accelerate, internet capital markets, IBRL, founders, apps, tokens, these have been the slogans that are at least in part responsible for Solana's massive success. Now, the network is leading the charge across multiple metrics, from monthly DEX volumes to growing developer activity, which recently ended Ethereum's 8-year streak for the first time ever. And all of this user and all of this developer activity has, of course, spurred massive innovation throughout the Solana ecosystem. You've got Meta DEX aggregators working tirelessly to offer the most efficient swaps and the best prices for traders. On the payment front, we have Humor Finance, Cast, and others who are ushering in the future of money with their PayFi innovations, and it's all happening on Solana. But it's not just retail activity. It's not just innovation, because capital is flowing into the Solana ecosystem. We saw $650 million bridge to Solana last month alone. We also see billions of dollars of stablecoins being minted on Solana in preparation for more institutional adoption, which, by the way, is happening faster than we might think with this ongoing Sol Treasury vehicle arms race. So for most of us, the last 12 months have really been a tale of more users, more developers, more dApps, more revenue, and more institutional adoption. But something feels off in the trenches where we see division and disagreement. And let's not forget that without the trenches, without the billions of dollars of trading volumes around meme coin mania, we likely wouldn't be having this conversation today. The very same trenches that propelled Pump.fun to being the leading crypto app by revenue worldwide and managed to claim over 1/3 of all Solana revenues is now the point of much contention. So before we get on to more expert opinions, here's a quick rundown of the key facts and figures around Launchpads which are fueling this discussion. Over 1 million tokens were launched last month, and that's roughly 35,000 per day, with Pump.fun claiming about 82% of those launches. But Pump.fun is facing growing competition from some of those launchpads which we just named. And of course, another issue with launchpads is profitability, because only a handful of wallets have actually been profitable, with 0.4% of wallets earning over 10K. Last month, for example, we saw that over 96% of Pump.fun traders lost money, broke even, or made less than $500. That means that less than 2% of traders made over $1,000 on Pump.fun last month, leading many trench warriors to lash out at posts like this one, which somehow insinuate that Pump.fun is more profitable than a Harvard economics degree. This user, on the other hand, humorously captures some of that irony when he suggests that extracting $1 billion instead of airdropping $1 billion will eventually be studied by Harvard students. And of course, it doesn't end there, because fueling this criticism even further is the emergence of these new launchpads like Believe, which are gaining traction and support from people like Ansem. Because the platform is giving indie app developers a way to fund and tokenize their projects, or in other words, vibe raising. So how are these new launchpads any different? The new launchpads have naturally had to differentiate themselves, and unlike Pump.fun's Open Frenzy with millions of tokens launched without seemingly any checks and balances, Believe is doing things a bit differently because it adds this layer of curation, meaning the team will only feature tokens tied to a vetted startup idea or team. So Believe appears to be striking at the very contention between the trenches and Pump.fun, because as the founder Ben Pasternak puts it, Believe's primary objective is to create harmony between builders and traders. Here are two more posts from Imran Khan and Nikita Beer explaining what makes Believe's flywheel so successful. Firstly, the concept's simplicity. Calling it the Kickstarter of ideas and projects is catchy, and it's easy to understand. Secondly, the virality factor of minting a coin in front of everyone and teaching them how it works can of course maximize the chance of a product taking over the market. But despite all this positivity, the community remains split. Some praise the success of projects like Yapper, while others worry that it extracts value and that actually it's just propped up by crypto Twitter KOLs who are simply here to take your soul. So going back to the original question, the burning question that we still need to answer, are launchpads net positive for the trenches, or do they negatively impact the way institutions think about Solana and somehow cause a knock-on effect, reducing future SOL purchases?
Candidly, I don't think that they're that in the weeds quite yet. I've had a lot of conversations. Not one has mentioned Pump.fun. Yeah, so I actually don't think it changes their view of Solana yet. Obviously, if you take $1 billion and you ride off into the sunset and you don't work on Pump.fun, it is extractive. But I'd like to give all the investors in this round much more credit than that. And I've heard a lot of folks talking about them looking to create or further the streaming service and like compete with Twitch. And obviously like streaming influencers are not cheap.
And to end on a bullish note, here's DeFi Dev Corp's Dan Kang with a personal take on memes. Are we bullish bonk? Are we bullish memes in general? What's going to happen in the next 6 to 12 months, Dan?
I am bullish memes in general. This is not a DeFi Dev Corp view and not financial advice. But yeah, I mean, I mentioned this memes kicked off the cycle in many ways. And, I think for me personally, memes continue to be a really great way for folks to get into the ecosystem. They continue to be a great way for, I think, folks to enter crypto more broadly. And I've mentioned this on several other interviews, but I think memes are probably like the most passionate way to express peaceful rebellion within the broader financial system. And yeah, hard not to be bullish in that context.
Hope you found some value in today's video, and if you'd like more updates from across the Solana ecosystem, you can of course subscribe to Solana Floor and let me know in the comments, will Pump.fun's $1 billion raise cause any issues for Solana's institutional adoption trajectory? I'll see you next time for more of the very latest.